this is a very bullish setup for Bitcoin into the election. We saw the exact same pattern in 2020 where Bitcoin lagged with low volatility, and then once a winner was announced, we had a high vol rally as new buyers come into this market. And that's the great thing about Bitcoin, is that every day there's new buyers being born. It's kind of like the video game industry. The olds who hate it die off, the new folks are buying it. And what we think is that once the election result is finalized, Moody's is going to downgrade US sovereign debt, and that could be a catalyst for Bitcoin. By 2050, this is very long term, that Bitcoin becomes a reserve asset that's used in global trade and held by global central banks at a very modest 2% weight. And in that model, we arrive at a $3 million price target for Bitcoin. Now, that sounds, extreme, but that's a 16% compound annual growth rate for a couple decades. That's not really that extreme. So into the millions over the medium term is a high conviction call.
According to Sigel, Bitcoin's performance is closely tied to two key macroeconomic variables: a negative correlation with the US dollar and a positive correlation with M2 money supply growth. Recent developments, including the Federal Reserve's pivot to a more accommodative stance, have triggered renewed money supply growth, which could support Bitcoin prices. Sigel also notes that seller exhaustion, particularly from the German and U.S. governments, has reduced market pressure after they offloaded $2 billion worth of seized Bitcoin. Sigel emphasizes that Bitcoin thrives on volatility, especially during election cycles. He draws parallels to the 2020 election, where Bitcoin remained relatively flat before skyrocketing once a winner was announced. He anticipates a similar pattern in the upcoming 2024 election, predicting that uncertainty will persist until the election concludes. Post-election developments, such as a potential downgrade of U.S. sovereign debt by Moody's, could act as significant bullish catalysts.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Trump is clearly the more pro-crypto and Bitcoin candidate, and VP Harris has not said a single word on it, so one doubts whether she truly understands it. But to your question about the correlations, the most significant long-term correlations for Bitcoin are a negative correlation with the US dollar and a positive correlation with money supply growth, or M2. So clearly on the latter front, money growth has reaccelerated with the Fed pivot. That may be playing part of a role. Also some sellers exhaustion. The German government and the US government sold spitefully $2 billion worth of Bitcoin in the last couple months. That has eased, and I think the election is helping. Polls are helping.
Why'd they do that?
German government seized a couple $1 billion of Bitcoin in a crime and sold it in August because they don't like it. The correlations change over time. Over a 10-year time horizon, the NASDAQ correlation with Bitcoin is a 0.19, quite low. Over the last 3 months, it's a 0.5, and that's a 2.5-year high, and that may be keeping some allocators on the sideline because they want to see it fall. Our bet is that this is a very bullish setup for Bitcoin into the election. We saw the exact same pattern in 2020 where Bitcoin lagged with low volatility, and then once a winner was announced, we had a high vol rally as new buyers come into this market. And that's the great thing about Bitcoin, is that every day there's new buyers being born. It's kind of like the video game industry. The olds who hate it die off, the new folks are buying it. And what we think is that once the election result is finalized, Moody's is going to downgrade US sovereign debt, and that could be a catalyst for Bitcoin to
Doesn't
catch up.
gold correlate with the dollar and with M2 as well? And gold and Bitcoin seemed like the correlation broke down a couple of times recently.
Bitcoin is a chameleon. Its correlations change over time. It's hard to predict what it's going to be correlated with over the short term, over the long term.
But you really say it's because of the 21 million and it's fixed amount is out there, therefore the debasement of the currency favors that. I mean, that's...
Yeah, it's
Some people call that fairy dust.
It's a non-U.S. asset. It's an emerging markets asset. And while we were all hyperventilating about the election over the last week, BRICS had a conference in Russia. There's 6 new members of BRICS this year. So BRICS GDP is now greater than the combined GDP of G7. Of the 6 new members, 3 of them, Argentina, the UAE, and Ethiopia, are now mining Bitcoin with government resources. So there is tremendous urgency outside of the U.S. to find a way to circumvent the irresponsible fiscal policy that we've been running here in the U.S. In fact, Russia announced an initiative. Their sovereign wealth fund is going to invest in a regional initiative to build Bitcoin mining and AI infrastructure throughout BRICS with an idea of settling global trade in Bitcoin. So look, someday, I don't know if it's 5 years, 10 years, Putin's going to die. We're going to look to reintegrate some of these countries into the world financial system, and they're going to be trading with Bitcoin. What are we going to be doing?
I have no idea. He sounds, what you think it's going to be a $100,000 asset soon, 200.
Yes. The smallest ever trough to peak rally for a Bitcoin cycle was 2,000%. If we do half of that, that'd be 1,000%. That'd be roughly 180,000.
When does this all go down? Not down. When does this happen?
When did it all happen?
I think after the election will be a significant catalyst. You can see it front page of the Wall Street Journal talking about debt and deficit concerns. Right. Like Moody's is telegraphing this. Right. They want to downgrade sovereigns who have 20.
Like Kathy Woods.
What's that?
Like Kathy Wood.
My old boss?
Yeah. How do you feel about her predictions?
I don't think about them very much.
Do you think she's right? 500,000 is where she's at. By very soon.
We have a model that assumes that by 2050, this is very long term, that Bitcoin becomes a reserve asset that's used in global trade and held by global central banks at a very modest 2% weight. And in that model, we arrive at a $3 million price target for Bitcoin. Now, that sounds, extreme, but that's a 16% compound annual growth rate for a couple decades. That's not really that extreme. So into the millions over the medium term is a high conviction call.
Michael Saylor draws an analogy between Bitcoin's development and the rollout of electricity infrastructure in New York City during the early 1900s. Just as electrical systems required complex coordination, Bitcoin will need extensive infrastructure and regulatory frameworks to become mainstream. He emphasizes that banks, custodians, and corporate players must build systems to safely handle Bitcoin. However, Bitcoin's open nature means that multiple entities, rather than a single jurisdiction, can compete to provide the best services. This competitive landscape, Sigel argues, will drive innovation within the industry.
There's stuff to be built.
Yeah.
Right? If the accounting changes for every company in the world in February or January of 2025, then I guess that means the accounting profession has to learn a bunch of new things. There's new stuff to be done, right? New procedures. And accounting systems to be, reviewed. And likewise, it's one thing to say banks should custody Bitcoin. It's another thing to create, are 10,000 banks going to create their own Bitcoin custody service? Well, is that a risk or is that an opportunity? I guess I'm back to 1900 and I'm in New York and we just invented electricity. And I'm just pointing out that I think like one day all buildings will be wired with electricity. And you're asking me, are there risks in the wiring of New York City with electricity? And I guess there's going to be some electric fires, right? And there's also going to be a lot of fire insurance to get sold. And there's also going to be electricians and there's going to be electricians union and there's going to be a lot of projects and there's probably going to be a bond and somebody's going to complain about it. We're going to dig a lot of trenches, right? Because where are those power lines running? And someone's probably going to put a drill, jackhammer through one of the power lines and stuff's going to happen. And then we're going to fight over whether we burn coal or we run the power line to Niagara Falls. And there's going to be stuff, but I just think there's just a lot of work to be done. We're building out the future. There's an ETF called MSTY. Have you heard of it?
Yes.
Okay, well, MSTY basically sells something like, it feels like unhedged MicroStrategy volatility, right? So if you buy it, you're taking downside risk and they purport to be selling the upside via, synthetic long position selling calls or something. And, right now on my screen, I look at it, it says they've got $476 million of capital and it yields 226% interest.
Wow.
Okay, so that's yield. Now, the question really is it, what is the risk associated with it? Download the prospectus, study the strategy, look at, back test it. Does it actually constitute taking downside risk and getting paid 226% for giving up the upside? Is that exactly what it is? Or is there an embedded leakage where, you're actually losing 20% of your principal per year?
Mm-hmm.
I don't know. Right? You want to do an interesting podcast, right? I mean, do that analysis, backtest it, study it, take apart all of the risk factors, have the people running the ETF on your podcast, quiz them on this and try to figure out, have they figured out a way to generate 226% yield on MSTR? Yes, no, right? Very interesting.
Yeah.
If you're bored and you want something and by the way, if you're running an investment fund and maybe there's someone that wants to generate yield on Bitcoin, like, some people just want to hold the asset and pursue the capital gain unrealized forever. I get it. If you had a fund, if you're an institution, if you're Harvard Endowment or a church and you don't pay tax on operating income, I look at 226% and I think, well, that's a pretty big tax bill. But then I think, well, what if I didn't have a tax bill? What if I lived in UAE or Singapore, right? Or what if I had a trust which was tax advantage? Maybe you would feel differently about that. What if I've raised $1 billion to invest? I get paid 2 and 20, and I'm supposed to find all these ideas. Well, I think I think there's a lot of interesting ideas. I think that if Bitcoin is a 55 vol ARR or 50 vol ARR with a 50 vol, or 50 volatility and 50% ARR, there's a lot of people that they would rather have 20 ARR, 20 vol. Like they don't really, it's like high voltage power coming into your house. It's nice to have it, but then you don't want it in your hair dryer lest you drop it into the bathtub and electrocute yourself, right? Or on your electric razor. So you've got this big transformer box that steps down high voltage to low voltage digestible power. So some people, what they want to do is they want to lever up. Like MicroStrategy levers up Bitcoin to get to higher vol, higher performance. And that's high volatility equity. And that's why some people like our stock.
Michael Saylor also touches on the growing interest in yield-generating products tied to Bitcoin, using the example of a MicroStrategy ETF, ticker MSTY. This ETF offers an attractive 226% yield by engaging in complex strategies like selling options. However, Saylor advises caution, noting the importance of carefully evaluating risks and backtesting strategies. He suggests that these financial products could be appealing for tax-exempt investors or institutions based in low-tax jurisdictions like Singapore or the UAE.
Please like and subscribe my channel.